you're watching the midweek edition of Business Morning on Channels Television. Let's get straight to the markets. And here's Bosun. Bosun, good morning. Thank you so much for coming in.
I was just warming up.
Yes, you shouldn't just be warming up because the markets are already warm as we speak. So let's talk the numbers. Yesterday we actually saw that despite a tighter liquidity, interbank placement rate declined across all tenors.
Yes, because everybody was getting ready for the massive almost 170 billion naira that the central bank will put on the market today. So the auction today will have to be taken care of. Don't forget, these are very attractive government instruments, which you call treasury bills, and everybody's trying to take advantage of that. Now you see a bit of haircut, or some haircut, about 1.3% from the equities market. So fund managers, treasurers, traders will always try to balance things out. You need to look for money. Now look at what the interbank market, let's start with that a little bit. You look at tighter liquidity in the market, about $80 billion, naira was what's left in the market, as it were. That's not enough to take on the central bank 168 billion naira that the central bank will throw as treasury bills auction today. So the investors or traders will have to look for money elsewhere. 80 billion, there's a drop in 170 billion. So rates declined across all tenors despite the tight liquidity. We started the week around 40%. Now we're down to about 18% or 16% on call money and 30-day money around 17%. That was a massive downside to treasury bills, to interbank rates, and that was good enough for the market that's been overheating with liquidity in the last couple of weeks since the year start, as it were. Look at the interbank FX market. The Nigerian naira stays positive on the side of the greenback, the US dollar, that is 198.88. The central bank or the financial regulator is keeping the naira steady, trying to keep the local unit in shape ahead of the elections and try to prevent further dislocations of the market, because once the naira goes on a tailspin all over again, you see further damage to the bond market, the equities, the interbank, and every other thing go down with it. So keeping the naira in shape, keeping it steady around 198, 199 band is what the MFLA will continue to do until next week, Monday, Tuesday, when the Monetary Policy Committee meeting takes place, and we'll have some measure of guidance, as it were, moving forward into the election until after the elections from the central bank. The next monetary policy meeting will be sometime towards the end of May when the new administration settles in. So for now, keeping the naira in shape, make the naira behave itself until then. Now, move on quickly to Treasuries market. Very interesting scenario that we saw on Tuesday with what the markets research analysts are sending to us here from Vertiva Capital, Codros Capital, Securities Trade in Africa. Thank you all for sending this well-researched materials through. Now, this is some of the insights into what happened. Trading in the bills remain very bearish, yes, because everybody have to get ready for today's auction, as you see there, and as Harriet talked about. So today will be 167 billion. What central banks doing? Give you money on one side, take treasury bills back on the other side. So you do an auction today, then you repay maturities for tomorrow. So the market will be in topsy-turvy, and that will keep the equities down a little bit till the end of the week. Not a particularly positive penultimate week to the elections for the stock market there. Now, cautious trading for the short-dated bills. You see that the yields see some sharp uptick. Regulator will repay mature bills on March 19, and that will be coming at about almost the same amount as the auction that you see today at the primary market window. Now, what does Codros Capital, what's the forecast for today's treasury bills market? This is what Codros Capital sent overnight. What central bank will be putting on the table today will be 33.8 billion of 91-day instrument, 50.2 billion for 182-day, and 83 billion naira for 364-day bills. So the central bank will keep that auction today from 13.71% at the close of trading on December 31st, 2014. We're seeing average yield in the treasury market now around 15.42%. That's the rate at which the Nigerian government is borrowing money from the banks and the financial system. Quite very high. That's well above the benchmark interest rate. Now let's move on to the bond market. We're getting some news this morning that the Senate, that's Nigeria's upper legislative house, has approved the federal government's proposal to increase diaspora bond, the amount in that portfolio, from $100 million to to $300 million. The idea was to get more Nigerians to invest back at home, and that window has been expanded and has gotten the approval of the Senate for the federal government or for the executive arm of government to increase that portfolio from $100 million to $300 million. But if you look at the secondary market where bonds are trading, sovereign bonds are the market, you can see some yesterday's closing numbers there. Yields increased average 14 points on all the dated notes. Sell pressure across the long-term instruments. You find the yield on 15% November 2028 FGN bond at 14.51, moving up, and 13.97% for the 8.5% November 2029 bond. I said on Monday, Nigeria will still be here by then. That's my prediction.
Now, let's move away from the interbank, the forex, and the bond market. Let's talk about the equities market. This morning, we got information with regards to the Securities and Exchange Commission coming up with new rules to make the market more attractive. Of course, we're going to be talking to stockbroker analyst Rotimi Fakajoin in just a minute.
A very interesting story that I picked up just got on air. We don't have specifics. This was a news report, one of the dailies reporting that the board of the SEC, headed by Suleiman Ndenusa, on Thursday last week, had a meeting. This was someone who had an inside story saying that the commission has approved some rules that will, and I'm quoting here, that will soon be unveiled after the necessary rules-making process, I beg your pardon. They are meant to make the market to be more efficient and attractive. The process of bringing the rules out is what is currently on. So to make the market more attractive. Now, the SEC has a new acting CEO, and the president came to the NSE last week. Was it Tuesday or Wednesday now?
On Thursday.
On Thursday, thank you. And this meeting took place the same day in Abuja, while the president was in Lagos. The board of the SEC was in Abuja, meeting and said we're going to make more rules to make the president more attractive. So Guazo is on top of this, alongside the chairman and the rest of the board of the SEC. We'll see how that paces out. We'll see what these new rules are to make the market more attractive. Don't forget, Femi Awuyemi of ProShare was here a couple of days ago, and he talked about taking the SEC a lot higher, making more rules that will make the market more attractive and more interesting to investors. But let's talk a little bit about more stocks, Harriet, if you permit. 1.27% or 26% was what the profit taking was yesterday. Very interesting scenario for the second trading day of the week. That's the Osher Index down by that margin. So we're now effectively under the 30,000 psychological level. On Monday, we were 2.5% negative. So yesterday was slightly better than where we started the week with, and we think that will hold on for the rest of the week. I'm on the dovish side, as it were. If you look at the alternative securities market yesterday, the NSE Industrial Index, those indices remain largely unchanged. But the NSE Banking Index, that's where you have those commercial lenders, down 3.9%. So don't be surprised when the banking index bled 3.9%. You see the overhead figure for the composite index down by 1.27%. Harriet, am I missing anything else?
Well, not really, except the fact that I'm going to be